Good morning, traders and investors. Thank you for tuning in here this morning on Thursday, April 10th, 2025. We got a good show planned here for you today. We're going to hear about both Christian and Dennis's selling spree yesterday after the close. Was yesterday a bear market rally? We will ask the guys the all-important question. Well, we've been saying for the last day or two or three, a stock is a stock is a stock. All stocks are trading together. That does seem to be the case. Here this morning, we're going to hear about some price action in U.S. steel. Seems like the deal with Nippon is falling apart. A couple of earnings to just take a quick gander, although I know Dennis is going to say earnings, econ data don't really matter a ton here, but we are going to take just a quick look at earnings out of Constellation Brands and CarMax. We do have the unofficial start to earnings season here tomorrow. We're going to get big banks coming down the pipeline on Friday and Monday and Tuesday of next week. Heads up, at 8:30 here this morning, we are going to be getting an inflation reading, CPI, the Consumer Price Index, and PPI tomorrow. Our guest at 8:35 a.m. here this morning, one of our favorites, Blue Putnam, former chief economist at CME Group. Let's get it going here on pre-market prep, folks.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Good morning, Christian. How you doing? How's your morning going?
Good morning. Geez, such a quiet day yesterday. Should be another quiet one today. I'm joking, of course. Let's get to what some of the commodities and movers are doing this morning. Crude, which was up, a lot of commodities bounced yesterday. Crude is back down. Where do I see crude? Down 3.6%. Also, nat gas futures, just to kind of start with what some of the energy names are doing. That's down about 4% as well. Big move back up in gold. I find this very interesting. Maybe we could talk a little bit about gold later, but gold is up. I see gold up about 1. I think that's wrong. I think it's actually up close to 2% right now. A little bit delayed on gold futures. Silver, a little bit of has been lagging. That's also down about 0.6 of a percentage point this morning. Bonds, which got a lot of attention the last couple days. Bonds, 30-year bond futures are up 0.2 of a percentage point. Look at that, coming right back into resistance right there at the bottom of the value area. Let's get over to equity futures this morning. So after that huge move yesterday, you got a little bit of a move back. I personally think we hit some resistance. We'll go over that shortly. But S&P futures are down, looks like 2% right now. NASDAQ futures, which also hit some resistance yesterday. Boom, look at that, right into the bottom of the value area for the month. Resistance, down 2.2%. And then Russell futures this morning, they are also they're down even more. They also bang right into resistance yesterday, down over 3% this morning. And yes, as a reminder, we're going to get some heavy economics that are coming out 25 minutes. Will it matter? CPI report coming out in 25 minutes.
Triple D, what's going on this morning?
Well, a little bit of a sell-off after the ridiculous rally yesterday. That was unbelievable.
Just 500 points.
I can't even. So funny thing is, in the morning in the STN room, I'm like, some of these stocks, and yesterday too, I was just like, some of these stocks are just getting to a point where they're just too cheap. So I was like putting some stuff in a long-term account. I bought some NVIDIA the day before. I bought some AMD. I bought some JP Morgan. I went out and I had bought 7 stocks in the long-term account, just putting a little bit of cash to work because I just felt like, stocks down 20, 30%. I'd bought Micron too, number of stocks. With yesterday's rally, that long-term portfolio just became short-term because I'm looking at it and saying, AMD, I made 22% in one day. Dell, I think, was up 18% for my purchase yesterday. NVIDIA, I was up like 18%. Micron, I was up like 18%. I was like, when you get these kind of gains, in one day. It's a year's worth of gains in one day. Like you sit there a good year on some stocks, in your long-term portfolio is 18 to 20%. How do you not book some profits into that? Like, how do you not come in and say, hey, analyzing this tariff headline, and the big question is it just a bear market rally, or are we going back to all-time highs? I think we're still at war with China. I think, we kicked the can down the road for 90 days. That's awesome, but it felt a little bit overdone and almost to the point of ridiculous yesterday. Christian, what were you saying?
Well, first of all, if you decided to go and get lunch or something like that, I mean, just the amount. What I find just a little bit like mind-boggling is that if you stepped away for like 5 or 10 minutes yesterday, because it did happen at 1 o'clock, and I literally was going to go get something to eat, and I was working on something, and I was like, oh, I'll go, I'll go get my lunch in a little bit. Because I generally like to walk off and spend about take 10 minutes away from the screen, and go pick something up, and luckily I didn't do that yesterday. But I can't even imagine if, because I think that happened to some people. I think if you walked
For sure.
away and you missed one of the largest like short-term rallies ever. The semiconductors I think rallied. Let's see if I can get the actual number for you, but I'm just astounded at some of the moves. And
It's
we
unbelievable.
knew that the tape was kind of priced for, hey, if there was any positive news, we were
Yeah.
going to rip higher. So I think that was the feeling. You just didn't know when you were going to get that possible positive news. But the semiconductor ETF SMH was up 17% yesterday.
Wow.
There was a
Woo!
lot of
Wow.
there was a lot of one-day records yesterday. That's what, you
Yeah.
know, always fascinates me. For as long as we've been doing this, there's always something that fascinates me about the market. The VIX was down, ready for this?
Uh-oh.
35% yesterday. 35%. I think that was also a record. So, it's tough to kind of get your head or get your arms around, some of the moves that we had yesterday and just how quickly those moves happen. But that's the main question that I have is, was this just like a huge bear market rally? Dennis, I know that we've heard this expression before, but some of the largest like 1 day moves or rallies can happen in bear markets. They could be,
Yep.
what's the adjective that you want to use? Vicious, or there's another, you can throw out 5 different adjectives to describe it. Is, do you are
Yeah, it was. And I mean, if you were caught short wholly, that is just, if you're pressing your shorts, because shorts have, done really well over the course of the last couple of weeks. Obviously, the S&P in the last week falling from 560 on the tariff news, a week ago, down to 480. But, we're down 13% in 5 trading sessions. When you get those kind of moves, it's probably time, if you're short, to ring the register, because these counter moves do come, and that's what we saw yesterday. But getting like over 2/3 of the losses back from tariff day, they didn't go away. They simply got, delayed, and they didn't go away on China at all. It escalated against China. So I don't like that either. So when I was analyzing this headline, I'm just like, man, there's still a lot of potential bad things out there right now. It's not like it's all fixed. I mean,
Mhm.
and the other thing somewhat concerning to me, and if you look at the administration, and they've been like, nope, coming in, tariffs, tariffs, they're not going away for 4 years. And, you called this, Christian, you said the market starts falling low enough, he will probably back down. And that's what he did. I mean, maybe it took the bond market, maybe it took commentary from Jamie Dimon, maybe it took whatever, but we all of a sudden had a little bit of a Trump put back in yesterday. So that's the good news, is that it appears in this market that there still does exist a Trump put, because some people were saying that the Trump put is dead. He's,
Yeah.
all about the little guy, and, is going to let Wall Street suffer for that. Apparently not. Apparently, cooler
Mhm.
heads prevailed to a certain extent, and the administration started questioning internally what they were doing, because they wouldn't be kicking this can down the road if they were not questioning it.
Yeah. So I don't know if that, like, that announcement solves all the market problems. Clearly we had some very depressed stock prices, but Yeah, I mean, I think that we kind of go back, and I also go back to that the market was getting weak prior to all the tariff talk. If you rewind, and I know it's tough to do that because, we've been on information overload and headline overload, but you go back to what was starting to happen in February, and I think that the market was starting to kind of head lower. I think before we got all the news about that, so it brings us right into at this point, which is going to be a very noisy earning season. But we're going to have the big banks that are going to be reporting tomorrow, and it's really going to open up that for a little bit. I mean, 90 days to me, it's a long time. It's 3 months. We're going to hear maybe the headlines die down a little bit in terms of how the pace that we've had over the course of the last couple weeks, but 90 days is a long time. 3 months, it's been tough late recently to kind of look more than a day or two ahead. So 90 days now it doesn't solve the issues, which I think is important, but I think it kind of maybe shifts things so much to where we were leaning to like 100% macro type tape. Maybe it cuts it down to where it's
Yeah.
still a macro tape, like to 70%, and and then it kind of shifts a little bit more to some of the earnings. So we've got those bank earnings for next week. Yeah, I mean, it's kind of interesting. Normally, I don't do much for the financials because they normally don't move too much, but
Yeah,
um you know I look at the implied moves which you have up there on the screen, and they're really like, and I think it's also just a product of the VIX, which, by the way, I did not bring up what the
sure.
VIX is doing this morning. The VIX is back up 10%, so it was I believe it was the largest 1 day decrease in the VIX yesterday, but it's back up 10%, so it's up. 50 was a ridiculous level for me to kind of, think about,
Sure.
because that implies a 3% move a day, but you're still at right now a 37, which is, forget about where we were a couple days ago. But if you would have said a month ago, like, hey, we're at a 37, that's still a lot. 37 VIX
Mhm.
implies about a 2.3% move a day. So that's still a lot of
Whoa.
volatility.
And
Yeah,
you got to take advantage of this volatility. And how do you do it? It's buying dips and selling reps. It's classic, the same strategy that we have preached on this show for the last 10 years. And I mean, this is the ultimate environment for that, the ultimate environment, the
mhm.
ultimate trading environment. So I think you've got to like be a trader in this market. I don't think we're going back to all-time highs. Maybe I'm wrong. Maybe he's going to back off with China. Maybe this administration is going to say, look, tariffs, or maybe they're going to make deals with every single country, and we're going to be back at all-time highs in the snap of a fingers. That could happen, but I think there's also the probability here that China could play tough, U.S. could play tough. That trade war could go on for a while, and that is still going to have market repercussions. So with all the uncertainty that is still out there, getting all the way back, like 2/3 of the losses, maybe even 3/4 of the losses from the tariff day last week in one swoop. I think as a prudent trader and a prudent investor, I need to be selling into that. And give you a perspective here too, Christian. I don't know if you noticed this. I have never seen this before. The SPY closed. It had a closing order. It gapped up 4 points. So it gapped up about 0.8% on the closing print away from the futures price. I don't think I've
Wow.
ever seen the SPY move that far away from the futures price. It instantaneously came back in. But that
What?
548.62 close you see on SPY
Yeah.
is
Yep.
$4.50 too high. The other
And
indices,
what did we?
IVV, VOO, did not do that. So if you're
wh-
looking at SPY today down 2.7%, the market is not down 2.7%. IVV will give you a better feel. It's down 1.85. I've never seen that happen before. And just to explain it, we had some great people in the STN room show the print. It was over 8 million shares. So it had an 8 million share buy order, gapped up over $4. That's somebody, or not somebody, that's the collective people throwing away $32 million, to give you a perspective. That's how bad they needed in the SPY yesterday. So if you shorted the SPY on the close, you instantaneously made 4 points against the E-mini futures. I've never seen it get out like that.
Wow.
And Dennis, you were saying like I can't even last night. You were saying like I can't even use the SPY for reference here.
No, and I've never been not able to do that. I had to bring up the IVV or the VOO because that's where the market really was. The SPY is still out.
Here's that candle.
Sorry,
I hope you guys can see that like on the screen, but you're absolutely right. I mean, this is where we were, like, you know, right around 543 and 548. So yeah, let's look. I'll bring up IVV. That's a good point. But yeah, you don't see you don't see that print, and you know, that's just people doing, you know, there's mistakes that happen in this volatility. You know, traders are still human, and you know, you have to realize the stress that people have been under too. And when things are moving this fast, and you know, that's why I bring up the VIX, because and equate to how fast the market is moving based on the level. But traders make mistakes. You know, I mean, I've seen that when, you know, when I was on an institutional trading desk, I saw people do what's called fat finger trades. And you know, a lot of times,
of course,
I've seen it happen to people, and a lot of times, like, people blame it on the system, like, oh yeah, you know, this is a bad system. But I've seen, big heads of desks come over to a particular trader and be like, what happened? You know, but yeah, here's your print, you know, for IVV. Yeah, you don't have that same candle, which is crazy to me. And something like that would happen in SPY, because, you know, SPY
is so liquid.
It's so liquid. So you really have to do something pretty stupid. Again, I don't know what happened.
Here's what happens, Christian, just the mechanics behind that, because I trade the close on SPY all the time. If I am, you know, long stocks and I need a hedge, maybe I'm shorting SPY. If I'm short stocks, I need a hedge, maybe I'm buying SPY. But so many traders do it MOC, market on close. This is why I always, even on SPY, give your limit price. Because if you MOC it, market on close, you get executed no matter what the print is. So all it took yesterday is to put SPY, MOC, that order type, and you got filled at that really high price. Now, that rarely happens. I've never seen it blow out that much on SPY. But on individual stocks, you see it quite, you know, frequently. Like, what's like, oh my gosh, I can't believe where that just closed. Or, oh my gosh, I can't believe that gap down the close. That's why one thing on this show we have taught for the entire 11 years we've been doing this show is using market orders. That blank check is very dangerous. I always use limit orders, because if you were buying SPY MOC, it wasn't one person buying the 8 million shares. It was a collective population of probably arbitragers. You know, you had other people just coming in, institutional order flow, probably a lot of that in there, saying, yeah, I need to buy the SPY on the close here because these stocks are going higher. So they put it MOC. 8 million shares, you know, buy imbalance, boom. 8 million shares, 4 points higher. I've never seen that before. But again, in this market too, liquidity at any given point is a little bit wider too. So you think in this market, oh, liquidity is so liquid. It's not. Market makers go wider in volatile environments, because if you're trying to pick up a penny here, penny there, and you're losing nickels, dimes, and quarters, you're not going to be in business very long. So they widen out a little bit. Even SPY is like 9 cents wide here right now. Normally it's about 2 or 3 cents wide. The HFT market makers are a little bit wider right now. So just a quick market structure lesson.
Well,
but basically, MOCs, this is what can happen.
Well, that's a great point regarding limit orders. I was listening to somebody high up at Robinhood. I forget the guy's name, and they were talking about too. I know that you quote like the Robinhood markets, you know, after, you know, at late at night.
Yeah.
And I believe that if you're going to trade that, I don't trade on Robinhood, so I don't know, but I heard that there's no market orders after hours. Like, they make you put in a limit order, which is a pretty good safety mechanism for them to say that you can't do any of it in the after hours trading. If you're trading at whatever 10 o'clock at night or something, you can't put in a market order. You have to put a price. You got to put a limit order, which is nice. They should probably institute that for Robinhood traders, like during normal market hours.
24 hours a day, no market orders. Because everybody uses market orders there. I mean, Citadel lives on market orders. They just paying the spread all the time. They live on that. They love the market order. They encourage market orders. Just get you in and out, cross the spread all the time. I limit everything. I never send a market order. You know, I send hundreds of, sometimes thousands of orders a day. None of them are market orders. None of them. Limit. Even if you want to get out. I want to get out. Certainly want to get out. And the bid's at like 35. I would put I want to get out. I would put 34.50 to sell. That's called a marketable limit, because you're going to get filled at 35 because the bid's 35. But if something instantaneously happens in this high frequency trading world, things can happen. All of a sudden the stock's at 34. I don't want to get filled at 34. I hate the blank check. So that's all in execution tactics. We talk about that. We have lessons on that at Stock Trader Network. I mean, this is all about execution.
And like I don't know if you noticed this too, and this is too large of a conversation to have this morning, but I will sometimes, like, if I want to get filled on something and I think that the bid ask spread, like, I think that you could get some type of liquidity inside inside that market, I will sometimes put my limit order just a little bit above the ask. But
Yep.
number one, it and you have to have some urgency. Like, if you don't do that type of an order when you're kind of like you're relaxed, like you could go in the middle of the market and get, try to get the best price. But when I have some urgency and I want to get filled, sometimes I'll put my limit order a little bit above the ask, and sometimes I will get filled at like a better price than that ask price, because it'll so-called sweep through anything that's out there, and sometimes I'll get a better price than what the ask is. So I don't know if
I,
you do that with some of your executions as well,
I-
but I
I've got a
find that you can
lesson
get
on
that.
it, Christian, on order execution. It's a 3-hour course on order execution at the Stock Trader Network. And I talk about that as like going 2/3 of the offer. So I've talked about that. If you're small, if the offer is like, 20 to 20 cents wide, you don't have to lift the 2020. If you go 2/3, so about 2014, saying, if you're like, trying to buy it and the bid is 20 and the ask is 2020, you don't have to put 2020 to get it. If you go 2014, 2015 on a small order, if you're huge, it's going to post you on the bid. But if you're like
Right,
100
right.
or 200 shares, you go about 2/3 of the way, you almost always get done, especially intraday, because 2/3 get up. Other execution tactics are to use midpoint. So midpoint, what it does, it tries to find liquidity at the midpoint in whatever dark pools, they're sending your order through. I get filled on mids all the time. They're great. And even on the exchanges, have midpoint executions as well. So, I mean, crossing the entire spread, you typically don't have to do it.
Folks, we got about 8 minutes here before the CPI. Want to ask you guys a quick question here, and then we'll get over to preview the CPI before 8:30. So, we have an elevated VIX here. We have big banks which are showing some high implied volatility. You guys have both been talking about a little bit of a concept here that I just want you to kind of like deliberately explain. A stock is a
Sure.
stock is a stock is a stock. What do you guys? You guys have been saying that lately. What do you mean by that, Dennis?
It means all stocks are typically moving together right now. When the VIX gets above 35-40, stocks all tend to trade together. We saw yesterday, we were saying that in the STN room. We saw yesterday that one of my watch list of 200 stocks, 198 of them were green. So Coke, Pepsi up 3-4% yesterday too. So you have, typically a negative correlation sometimes with staples and the overall market. That ceases to exist when the VIX starts to get up above 35 or 40, because now stocks are just all moving together. It's moving together. Sometimes you'll see oil stocks going up on a day that oil is actually down simply because they're a stock. So just understand, as the VIX rises, correlations start to come together. As the VIX falls back down to the teens, correlations are all over the place. They start to go normalize. But when the VIX rises, everything starts to move together. So that's why a stock is a stock is a stock when the VIX is above 40.
Yeah, and I'll just add too, like, I make adjustments when I see that going on. I don't need to go and be. I've been talking about it, trying to keep it simple, and you don't need to be that fancy and that
Right.
complicated. You could just trade the indices. When the indices are moving like they are, I'll just trade, a little bit of TQQQ, SQQQ, because these things have enough. They begin like, normally that's the beta trade is what, the overall market is doing. And you go into single stocks and you look for alpha. Well, sometimes sometimes the indices are the alpha. They're the ones that they're trading fast
Mhm.
enough that you don't need. And I'm like, that's what I was trading yesterday. I traded a lot. I had a couple single stocks on too. I had Nvidia on yesterday, which had been scouting out the last couple days because I thought it really showed some relative strength to it. This was, I noticed this yesterday before the announcement, was that it was trying to turn the corner yesterday. And I'm like, wow, I'm like, that's really interesting. I haven't traded Nvidia in quite a while. So I was like, and but I'll go and I'll stick to some of the bigger, more liquid names, rather than go off the beaten path when you've got a VIX like it was trading yesterday around 45.50. But I was like, okay, I can trade like Nvidia's liquid, and I thought that was interesting. But for the most part, so it's kind of mixing in a couple single stocks like in Nvidia. I bought some Walmart yesterday too.
Yeah.
But I was like, this is really interesting. It made a really nice turn. And I talked about this yesterday afternoon too, and it's kind of hanging around this 111 level. So for me, like, green light above 111, at this point, like if I were to put on a new trade in Nvidia, green light would be above 111.40. And basically, red light is if it gets back below like 110 at this point for a trade like going forward, because I think many investors, like most, some people were just not fast enough to get involved yesterday. And now you have to kind of think about where you want to get involved in this market, what levels.
Yeah.
And I think separating that a little bit helps.
And to reiterate a point that you guys have been making, I mean, while we have so much still headline risk, despite what has happened this week, we still have so much headline risk. The value of earnings, the value of economic data is definitely lessened. That doesn't mean shut it off. That doesn't mean don't look at the CPI that we're going to get here in a minute. You still need to be aware of it, but just understand that the market is not being driven by economic data. The market is not being driven by earnings. Is that picture going to change in a few weeks when we're like in the heart of the earnings season and maybe hopefully some of the things on tariffs have cooled down? I think so. But you see this kind of shift happening. I think, maybe we are heading into a phase where this stuff is going to start to mean a little bit more in the next few weeks. What do you think about that, Dennis? You've been a
Yeah,
big
for
proponent
sure.
of like
When
it doesn't matter right now.
Yeah, like earnings, like, or ratings, like people are saying, why aren't you doing ratings anymore? Because they don't matter right now. They don't matter at all right now, but they will start to matter again. When the VIX starts to come back in, markets start to normalize and all the individual micro news matters. When the VIX is elevated over 40, and I've traded a lot of markets where the VIX has been elevated over 40, we're talking about the financial crisis, we're talking about the tech bubble burst, we're talking about the COVID markets. This is not my first rodeo here, so I understand all those correlations. And I will tell you again, people say, oh my gosh, how do you make money in this market? This is the market that if you are understanding real market mechanics, you make more money. I guarantee you right now, Virtu Financial, killing it. Citadel, killing it. I'm killing it. Like this is so to give you perspective, how many trading days have we had this month? How many trading days?
Let me see. I'll
One,
race.
two,
Let's
just checking
race.
the calendar.
1, 2,
I'm
8.
not bragging. I'm just
Today-
telling you there's big money being
Today's
made
the
right
9th.
now.
Today's the 9th. Today's the 8th.
Yeah, today's
Okay,
the 8th
the
day.
8th trading days. 7 full trading days we've had. I'm up more in these 7 days than I made in the entire last month, which would be 21 days. So, in my trading account. That's not because of the big rally yesterday. I didn't make much on that rally yesterday. That's just because the volatility is up and the whipsaw action is there. Like for 3 days in a row, I've had my best days of the year. Thursday, or I'm losing track of days here. We are like Monday, Tuesday, Wednesday, best day of the year, best day of the year, best day of the year. All 3. Those 3 days were bigger than any of my other days for the whole year. That is what we are in right now. We're in a trader's paradise. These huge moves, these whipsaw moves, 22% on AMD yesterday. That was just silly. And you know what I'm talking about too. Like there's just huge moves right now. So there's big money being made and big money being lost, but you've got to be able to navigate these markets. There's big money being made by traders. Don't kid yourself. Not everybody made it. Like everybody made money yesterday because the market's going up. But even in those down markets, the traders who know how to trade both sides of this market are doing very, very well.
Well, this is an important concept too, because when younger traders enter the market, when they want to be, a full-time trader or get more active in trading, they're like, "Hey, I want to make X amount of money a day. Like, if I could, tell me how to do that every day." And it doesn't work. Profits and losses too. They come in. Sometimes a couple days will make your month. And it comes in spurts like that, and it's something that you have to get used to. That, hey, you're not going to get that steady days where you're going to make the same amount of money. If you're capitalizing on the market opportunities, you're certainly going to have bigger days. A couple days of the month versus some other days or some weeks it's just not there, and you can't make as much money. But
Christian,
Yep.
I think that's a good way to get on tilt too. setting a target for yourself like that, because then you are searching, you're seeking this thing that, it's, I don't know, it's just hard to hit. So it's a
Here we
good way to
go.
like let emotion come into the market. We have
15 seconds.
CPI.
15 seconds.
Yeah.
Thank you,
They're
Dennis.
looking for only a 0.1%, which is for the month over month change. So it's a lower expectations. Let's see what we got.
Wow. 3
Wow, look at
points
that.
wide on SPY. We're 3 points wide on SPY.
Minus
Negative 0.1.
0.1%. Go for it, Christian.
Oh, you got it. All yours. Go ahead.
Minus 0.1%, the base reading month over month, the
Wild.
core reading, which excludes volatile food and energy, up 0.1%. Economists were looking for a 0.3% increase there month over month just to hit the year over years. The base reading up 2.4%. That was a little lighter than expected. And the core reading year over year, 2.8% higher, 3% was expected for the year over year reading. We are ticking a little bit higher here in S&P 500 futures, about 30 points here in S&P 500 futures. The last trade I got 54.20 in S&P 500 futures. What are you up to behind the scenes there, Dennis?
Canceled all orders, obviously. And the first thing you do when you're doing market making and you're trading, obviously as active as yet, you don't want to get picked off. You get picked off on news. You never want to go into an economic number, even in normalized markets, with all your orders sitting tight. Because then if the market blows up, you get sold. If the market goes down, you don't get executed. It's a lose-lose for market makers. That's why you see them go so wide. I said SPY was 3 points wide there for a second. The market makers go, bang, get the hell out of the way so we don't get picked off. Now we start to get some feel. Other orders come in, then we can start making markets again.
And I see Blue in the background. He's smiling. I think he was smiling at when you said cancel all orders. You guys want to bring him in right now? He looks ready. You got any thoughts, Christian, before we bring in Blue?
I mean, yeah, we'll talk about this with Blue too, but everybody thinking tariffs and inflation goes higher. People are not understanding the demand issue there too, is that when people get nervous when they hear all these headlines and they stop purchasing and they stop, so I don't know if that's what's going on here in the numbers, but I've been taking the other side of this argument that tariffs that are going to cause inflation. Yes, that's what the traditional thought is, that you put tariffs on cost of goods, they're more expensive, but when people don't buy, when they tighten up, you're not going to get inflation because people are spending less. All right, let's bring on Mr. Blue.
There we go. Blue Putnam, good morning, sir.
Yes, good morning.
Think? I think I know what you're going to say, but what do you think of that CPI data point that we just got?
I like Christian's point. I mean, it's definitely a light number. And part of it is energy and food, getting a little relief on the food side, definitely some relief on the energy side. But there's more to it than that. There's some other categories I haven't been able to look yet that are down, or at least not growing as fast. So, it's overall a very light number, and it's a very good number. We're still at, 2.4 on year over year, 2.8 on the core. So, we're not at 2% or anything, but this is an encouraging number. But I do like Christian's point that when the economy slows down, you don't get as much inflation. People just aren't buying as much. And that's already happening in my view. I mean, you have all the layoffs at the federal government. You have all these grants not going out. Indirect employees are getting laid off. There's just a lot of concern out there in the economy, and people are being careful. But unfortunately, tariffs will have some impact, and that'll show up in May and June, depending on what happens. So this is, I can't take this number too seriously, but it's definitely a good number for the Fed. It's a good number for the economy.
Does it change
Blue, just want
the
you to be
Fed's
deliberate
thinking at all? Oh, sorry. Does it change the
No, you're
Fed's
fine.
thinking at all, Blue? Or is this just like one more small number that probably doesn't move the needle here?
It changes thinking at the Federal Reserve maybe a little bit. The Federal Reserve has, its dual mandate of inflation, price stability, and encouraging full employment. However, and if you look at things like the Taylor rule, which says the Fed values these things equally, that's just probably not true. The Fed is very concerned about inflation, But they also believe, as Christian was talking about, that when unemployment starts to rise, you don't have to worry as much about inflation. So your priorities shift. And I do think that as this CPI gives the Fed a little bit more leeway to focus on unemployment. Now, unemployment's not rising yet, okay? It's just fine. That's something, again, that we would expect to happen in May, June, and July. But a lot of the people that have been let go at the federal government level are not really eligible for unemployment yet. They may still be working until they resign. They got a lot. So this data is going to take a long time. Where you see the hard data is in the continuing claims on the unemployment. The continuing claims are important because they show that it's hard to get work. The new claims are not as important right now because, just as I said, some of these people aren't eligible yet. But anyway, I do think it gives the Fed a little more leeway to cut rates if unemployment rises.
So, Blue, you bring up a great point about that some of what we're hearing about with the layoffs, it's not gonna, you're just not gonna see that in the data, which, the Fed likes to get all comfy with the data and like, oh, this is what the data is telling us. But like, where else would this show up? Like, I know that, a report that has become more popular is like the JOLTS jobs openings. Like, do you look at that as well for like some clues to say like, okay, the economy's, if you're not seeing as many job openings, that also like can tell you too that perhaps the economy's not as strong as what's perceived by the headline jobs numbers.
Yeah, I look at JOLTS. I mean, we all look at almost everything, but on the list of important statistics, JOLTS is not on my list. It's a survey. You can post jobs in multiple locations, the same job. You might, once you decide you're not going to hire anymore, you might not pull your post for a while. The data's that lagged an extra month behind the employment data, which is lagged behind the weekly unemployment insurance data. So, yeah, I look at JOLTS, but I don't look for long. But by the way, JOLTS has already gone back to pre-pandemic, and it's not showing any super strength. It's already, it's definitely showing some weakness or at least return to pre-pandemic levels.
So let's hear Blue Putnam's update following some of the tariff stuff this week. What changed for you this week when we got some of these tariff updates out of the administration and around the globe?
Well, we found out when President Trump backtracked on the tariffs. We found out kind of where the maximum is, which is what we thought it was on Tuesday or Wednesday. Oh, Tuesday. Maximum tariffs. And we also found out that the heavy energy was going to be pointed at China. We already knew that. But it still doesn't remove, the backtracking does not remove the uncertainty. We're only got a 90-day pause. We don't know what kind of negotiations are going to happen. It's fairly easy for these negotiations to get a little testy, shall we say. So I think we're not out of the uncertainty at all, and we've got uncertainty coming from all over the place. I mean, we don't know when the debt ceiling's going to be fixed. We don't know when the budget's going to be fixed. We don't know how many more federal workers are going to be fired. We don't know what grants are going to be there or not, and we don't know the tariffs. So uncertainty is still hanging over this market. So that's Dennis's, in my language, correlations go to 1, but the stocks move together in that kind of environment, or at least a lot of them do.
Hey, Blue, I have a question. I'm not sure how well you're following currencies too. I'm very much like I'm a tourist in terms of knowing how like the currency moves and how they're impacting things. Like, so for example, like a traditional thing is like, hey, when the dollar's down, it's normally good for stocks, but we're seeing such volatility not only in equities and bonds, which we've heard about recently, but also what's going on in currencies. I'm looking at what the dollar's doing now after this number, and you got the dollar futures are down quite a bit. They're down 1.4%. So again, I don't know if this is in your wheelhouse of looking at analysis, but is the dollar going down this fast like an actual problem?
Well, it's not a big problem today. But yes, currencies are in my wheelhouse. I started my career as a currency analyst, and you kind of never stop. It connects the whole world. I'm worried about a couple of things. The dollar is a little weaker today just because of what we were talking about a few minutes ago. This gives the Fed a little more leeway to cut sooner than maybe they might have thought. Don't want to get carried away with that, but that's a little bit of worry about the dollar. The second thing on the dollar is what we were also talking about. The uncertainty factor still remains. The tariffs are still in play, just maybe not as aggressively. We don't know what's going to happen over 90 days. But the really big thing about the dollar and the longer run thing is that, countries all over the world, sovereign funds, central banks, are looking at the dollar and saying, my relationship with the U.S. has changed. Mark Carney in Canada made that absolutely clear, but you're hearing it in different words from all over the world. And what that means is that they're going to diversify their central bank reserves and their sovereign funds out of U.S. treasuries and out of the dollar. Now, that is a 10-year process. It doesn't happen quickly. And some of it will be buying of gold, which the central banks have been doing pretty aggressively the last 2 years as a hedge for them, and that's worked out well. But some of it will simply be diversifying central bank and sovereign wealth fund portfolios into other assets besides U.S. treasuries or just dollar-denominated assets. And this may cost them some money, so this is more like a slow bleed. But that's what I worry about. And I can tell you what my signal is. If you've studied emerging market economies, the really bad news is when you've got inflation, the country's not growing, and the currency's weak. Those three things together are really bad. U.S. is only at 2.5% to 3% inflation, but we're worried about the tariff impact down the road. The economy is weakening. The bonds have sold off, even as equities have sold off. That's not a great sign. So you've got countries all over the world that are really starting to worry about the dollar. And I can tell you when the worries are going to become super intense, and that's when we start discussing who's going to replace Jay Powell. His term runs out in the spring of 2026. And if we get a really low interest rate person, and particularly if we get somebody that wants quantitative easing, and that would be to lower 10-year treasury yields, that's why you would buy them, then the dollar is going to be off to the races, and it's going to look like the 1970s, and it's not going to be pretty. But that hasn't happened yet. That's just a worry.
So if foreign investors aren't kind of hiding in the dollar, looking to put some investment money to work in the U.S. and the dollar, where do you think they might be going moving forward, Blue?
They're going to go everywhere because there's no really great competitor to the dollar.
Sure.
The euro has got its own issues. It's certainly the number 2 competitor, but it's pretty far behind. The Chinese yuan or renminbi, that's not going to make it. You can't trade that thing that easily. It's a managed currency. In fact, China's letting the yuan weaken so that they can partially offset the tariffs and still sell their exports. So they're not involved. Now, the Japanese are involved in this. And we are having some unwinding of the Japanese carry trade, and that also hurts treasuries and hurts the dollar. There's more than one thing going on here.
Well, I think that's important to realize too. I mean, the rumor has been with what's been happening in bond yields and especially the long end of the curve is that, it's China selling, but you also have to remember that Japan is a huge holder of U.S. treasuries, and that's also their currency is also, is volatile as well. So, I know everybody always looks for a scapegoat or, oh, it's this or it's that, but there's a lot of just to your point, there's a lot of implications going on. And I just thought, I want to get your thoughts here too about the volatility that we've seen in treasuries. Was that the final straw to really kind of break the camel's back in terms of, equity volatility is one thing, but when you get the volatility in the treasury market, it's a big deal. Do you think that this is the treasury volatility is a warning signal?
Oh, it's definitely a warning signal. Treasury volatility is telling us to be very careful. It's telling us, of course, what we've already been talking about. Things are really uncertain, but it's super uncertain for treasuries because we don't have, the House of Representatives was supposed to have a vote yesterday on a budget resolution, a big, beautiful resolution. That did not happen. Okay. And that was because there's infighting in the Republican Party about wanting to cut expenditures even more than the Senate bill did. But when it gets to the full vote, if it touches Medicaid, it's going to be hugely political. And of course, the debt ceiling is still wrapped into all this. So bonds are right in the headlights. And the Treasury Secretary, Scott Bessent, has made it clear that he's actually more interested in seeing 10-year yields go down than he cares about the short term. He's willing to wait on the Fed, but he wants the longer term rates to go down. They control mortgage rates, they control high yield borrowing. Those are really important rates, and he totally gets that. But they went the wrong way in the last week or so.
Blue, last question for you here. You were in the STN room last week just after the tariffs were obviously announced by Trump. We had sold off substantially that night and into the next day. And then you came on and I was like, just getting your market thoughts, on, all this uncertainty with this tariffs ad. And you said something where you said that markets may not have enough bad news priced in here yet. We proceeded to fall another 10% after you said that. Now I want to ask you, so it was a great call. Now I want to ask you, we had this huge rally yesterday. We got all of those losses back. What are your thoughts here? Be your market predictor, because it looks like you're not only an economist, you're pretty good at making market calls here. Blue, give us your market prediction after we had this big rally yesterday.
Well, my prediction is that we're going to tread water on equities and slight weakness if you were to go to sleep for 2 months and wake up at the end of May. The day-to-day volatility, of course, is tweet-driven and so forth, policy reversals, new policies, headlines. So, lots of volatility. But when you get a direct impact from three things, federal employees, the budget, and a big one like tariffs, companies they're going to pause their investment activity where they can, because they got to think this thing through. It is really hard to rearrange supply chains. You may be better off just living with the tariffs, but you got to figure that out. And that takes time. And then we know consumers will pull back and just be a little more cautious. And that's probably what helped the CPI that was just released, as Christian was talking earlier. So that means the indirect effects can be larger than what you see immediately. And the indirect effects are for a slowing economy, and that's never good for corporate profits. So I'm going to be cautious. I used to live in London. We had a saying over there, sell in May and go away. I've already sold. I'm just going to, I'm going to be on the sidelines for a couple of months here, because I don't think we've hit bottom until I really know. But we now know the worst case for tariffs, but we don't really know where they're going to end up. So caution is my advice, and it's not great advice, but whatever your risk tolerance was, it's a little smaller than it was.
I have one more question for you, Blue. Gold, on a day like yesterday where growth stocks went ballistic to the upside, and that was a big oversold rally yesterday. And I was watching last night because gold was kind of staying in, all day, kind of just stayed around, like was hanging around. There wasn't like a big, move to the downside in gold. And I started to watch it last night too. I was going through some charts last night and I was watching gold, and gold started to move higher. Do you think that this gold trade stays? And do you think that this is a good being that you're saying like, hey, for the next couple months, you're going to be more, kind of watching things. Do you think gold just is a place to be for now?
I view gold more as a hedge against the US dollar than I view it as a hedge against inflation. Now, we all kind of, well, not we all, but those of you who want to go back and study the 1970s, you had both inflation and a weak dollar and rising gold. And so some people said, well, gold is inflation related, and others like me said, wait a minute, it's really more about the dollar. I think it's about the dollar right now. It's about this long-term worry that the Fed loses independence, that eventually they cut rates if the economy weakens. And in those kind of situations, gold is both a diversifier from the dollar as well as a hedge against the dollar. So I think the gold rally is got some more legs in it.
Excellent. Thank
Blue,
you.
Blue, you're always keeping us honest. You're always staying practical here. You bring in some cooler heads to this group, into this chat. So we always appreciate you coming on, Blue.
Oh, thank you. It's always fun.
Thanks so much, Blue.
Thanks.
All
Blue.
right, have a good day, Blue. We'll see you soon. Always
All
a
right.
great interview here from Blue. S&P 500
Yeah.
futures did give up some of those gains following the
Yeah.
lighter than expected CPI data, and TLT just on my scanner. TLT breaking new lows here.
That's something you got to be concerned about too. Is we had a snapback, and it's funny when the bonds and the stocks start moving together. Yesterday, Christian, we had the snapback and TLT. They're moving together now. You don't normally see this. You see TLT as risk off, meaning the markets are crashing. We're buying
Right.
TLT. There's concerns here, and they're starting to see linkages there too. Maybe we know a stock is a stock, or maybe a bond becomes a stock when the VIX gets elevated too high here as well. But when you're selling off treasuries, there's still concerns here. There's still worries here, and it's looking more and more like yesterday's close was a really good selling opportunity.
Dennis, what are you going to be? So on a day like this, after we saw, we were going through some of the record moves yesterday, on a day, now that CPI is out of the way, and I think that was a very interesting report. But equities have given back that bump, and what are you watching today? Are you going to be? Do you have any relationships that you're really like that you've got on the top of your list, or is today just a day of like you're more watching things and then are going to basically tackle things once you see some things kind of separate?
Same thing from a longer term perspective, not buying stocks here. From a long term perspective, I think it was a selling opportunity yesterday. Now we're in the middle of nowhere. So if I get my swing trading eyes on, which I was doing, some buying yesterday, and they were short term, obviously, we're out to be short term swings. I think we have too much air below. We also have some air above. So you got to be somewhat cautious approaching. I mean, I'm always doing relationship-based trading. And the nice thing is when the VIX elevates, like we were saying before, and what Blue just said, correlations go to 1. You can just hedge anything with anything because stocks are all moving together as a happy family or not so happy family. So those pair trading type strategies just work. You can get exotic and compare anything with anything at a certain point in time. But I think, looking, just with the investing glasses on, I think I'm sitting on my hands. I think if we get down near 500 SPY again, people are like, oh my gosh, what are you talking about, Dennis? That's, from 530, we're talking about 300 points back down. I mean, yeah, I think that's where my buy zone is now. I think, I have, buy zone and sell zone. I think you're up a 545, 55, 60 is more of a sell zone. I think probably in the lower 500s on SPY, it's probably a buy zone. I don't think we're getting back down there today. I don't think by any means. So I think, just from this perspective, from an investing standpoint, I'm sitting on my hands. From, a swing trading perspective, I'm probably sitting on my hands. From a trading perspective, I'm pairing everything with everything. What about you, Christian? Let's ask you. Let's reverse this and ask you how you approach this day.
Yeah.
Because I mean, I'm not sure yet. I want to see if there's going to be some follow through. Like I'll rely a lot on my technicals, and where things are going to, even if we pull back, I want to see. I've got a chart, 1 hour chart here up of SPY. And I want to see, like, once we come down to support, which I see support, this is a little bit too far away. That's about 1% away. And that level is 526.43. So being that I don't have like a huge thing that I really want to get into this morning, I want to just see if there's going to be a separation between growth and value. We've talked about now several times that correlation picking up. I think I don't want to see the VIX go back above 40. I think it can hang out here for a little bit, the 37, but
Sure.
I want to see that start to come back down a bit. So a level to that. Yeah, it's amazing because I'm looking and like, oh, that's 1% down. It doesn't look that far on the chart. And I forget how fast this market, like 1% is nothing right now in this market.
Yeah,
So
it's true.
So 526.40 is a level that I'm watching in SPY. I want to see if the growth stock move yesterday, if that was legit, or if they just start giving things back. I think the semis are going to be interesting today. I'm also watching a couple software names as well. We could go through, like, I think Tesla will be interesting to watch today too.
Sure.
I haven't really done any major trading in Tesla because it's been so damn noisy. But here's one thing I heard yesterday too, and I wonder if you guys were thinking about this. There's supposed to be like a cabinet meeting with Trump's team. We had this separation. I'll try to say this politically correct. There's a little bit of a separation in views between what happened with Elon and Navarro. I'm
Yes,
wondering if
huge.
somebody
Yeah.
gets I'm wondering if somebody gets clipped. Now I would think if that would happen, maybe it's Navarro, but maybe Elon, maybe Trump says, hey, I need Elon to step back. If that happens, with Elon leaving, and he's only supposed to be working with the administration for so many months, but I'm
Yes.
kind of thinking like maybe I need to start looking at some type of an upside play and calls in Tesla in case he does
Sure.
leave.
We talked about this yesterday in the STN room, and we were, just contemplating, and obviously Tesla blasted off. We were talking about it in the morning and saying at a certain point in time, I think I want to start, I like this kind of liking, the area, the 220 to 230, where we found some massive support there. And, we were making, and I've been making that point for a bit here, is that Musk is starting to separate himself, you can kind of see, with his video, interview on the weekend where he was talking about, the Europe U.S. relationship and saying free trade is the way to go. I was like, holy crap. I'm like, that's in direct conflict to Navarro. I'm like, direct conflict. And, and then he gets, on his Twitter, how Musk is very opinionated and outspoken, which, part of me loves that about him. Calling, Navarro as dumb as a sack of bricks. Then backing up yesterday and saying, I want to apologize for my commentary yesterday with Navarro being as dumb as a sack of bricks because that's insulting the sack of bricks. I'm like, this is incredible. Like he is at full war with Navarro, and Navarro is tariff. So Musk is telling you, not so pretty much flat out saying he's not a fan of the tariffs. Musk is not a fan of the tariffs, folks. That is very obvious. And
hey guys, what's going
up,
on?
Joel?
What's going on?
Good morning, Joel.
Just hanging
Anything
out.
going on?
What's going on with you, Joel? You
I'm
missed
waving
blue,
the white
Joel.
flag, man. I'm throwing in the towel. This is
On what?
The markets, man. They're too
Come
crazy.
on, Joel. We need you, man.
I'm throwing in the towel.
Joel, don't do this to the audience. We need you
Yeah.
here, man.
Man, oh man. CPI, how is the CPI? Anything good, or you guys gonna fill me in the STN room? Because I'm totally in the dark here,
It was good for
man.
about a minute. It was good for about a minute.
Really? Okay.
Yeah.
All
That's
right.
where we're at.
It was lighter than expected, Joel. I don't know if you're being facetious, but it was lighter than expected. So say what you will.
I got the blinders on, man. So all right, I'll
That's
let you
cool.
guys finish up. I'm gonna hop in the STN room. Everyone have a good day.
Awesome.
What a little cameo there. I mean,
I
Christian,
like that.
that was kind of fun.
So we're trying to do a new schedule here because we're all talking so much here now, between, Christian's obviously he's got his chat room and then he's in the STN room, and like I'm talking and doing a lot more as well. So we're trying to do a little schedule where we give, a couple people a day off. I know, Christian, you're out next week. I'm actually off tomorrow. So we're trying to just save our voices here because my voice is hoarse from talking so much here. So, so Joel's going to be taking Thursdays off, it looks like, on the schedule here. And we're trying to figure it out. So as we go, we can figure out what we can do. We just don't want to overtrade ourselves and overtalk ourselves here, Christian. It's been so much. But I want to get Christian's final thoughts here because, this market did have the little rally on the CPI. It lasted about 10 minutes tops, not even 5 minutes. And now we're back down not too far from the lows of the session. Talk about strategy approaching today.
Yeah, keep your FOMO in check. I think really control what you can control. We've talked a lot about this over the last week. When you've got things moving this fast and separate, I mean, it's been such a macro tape. Some people don't like macro tape. Some people really like that stuff. I like when there's a little bit more separation in stocks too. Understand, what volatility is telling you, and that's why I've talked about making adjustments and just trading the indices. I will until the VIX goes back below 30. I will continue to just day trade the indices, and I think I really like the points that you've been making, Dennis. With hey, if you're flexible and you could trade both sides of this market, and you're taking what the market is giving you versus what you may want out of the market. It's continuing to be a trader's market where there's a lot of day trading that you can do right now and you can make money. Just I would urge everybody to try to be flexible with trading both sides of the market, because that is what the market is giving you, regardless of what you may want or what you may desire. So that's what I'm gonna be looking to kind of trade some ranges today to start off, and you don't have to try to figure out everything all. There's been such the amount of moving and headlines and volatility and the quickness of the market. You can't figure all this out in a couple hours. So control what you can control, your risk, and set up a strategy for today, which to me is trading the ranges.
We're going out on a high note, folks. That was some of the best commentary, Christian. Words of wisdom to end pre-market prep.
I love that. Keep your FOMO in check. I'm like going to write that down on my desk here right now.
With your chicken scratch?
Yeah.
Who's going to be able to read that?
I won't be able to read it because I can't read my own writing, but the thoughts there.
All right, folks, we are hopping over to the Stock Trader Network. It's www.stocktradernetwork.com. I believe pre-market prep listeners still have a promo code. Do we still got the promo code going, Dennis?
PMPSTN, we do.
Come check it out. Come check it out, y'all. It's fun. We're going to be broadcasting.
I'll see you guys at 2:00 in there today. So
Christian's Corner at 2 p.m. All right, folks, we'll see you over there.